Price is holding after a fast relocation, not because momentum disappeared, but because structure is being checked. On the 1-hour chart, the reference point begins with the US session on the 5th. That session opened below the Asia session anchor from the 4th. It also opened below the 20 moving average. This opening matters. Price did not start the session inside balance. It started below prior acceptance. From that point, downside continuation was limited. Instead of accelerating, price slowed. It began to spend time near a descending weekly trend line drawn from the October 25 high. This is the first key interaction. Price is not moving freely. It is operating near a higher time frame boundary. The market is not choosing direction here. It is checking response. During the same period, the Asia session on the 5th formed its own anchor. That anchor developed very close to the same weekly descending trend line. This places both sessions in the same structural neighborhood. When Asia session anchors form near higher time frame lines, price behavior often changes character. Movement becomes slower. Candle bodies compress. Wicks become more frequent. After the Asia anchor was set, price pushed above the Asia session high. This move did not expand volatility. It only shifted location. Following that push, candles began forming above the Asia anchor. They also began forming closer to the 20 moving average. The distance between price and the 20 moving average narrowed. That narrowing tells us something important. The market is no longer expressing urgency. Urgency produces separation. Processing produces proximity. Now watch how the 20 moving average behaves through time. Earlier, the 20 moving average was sloping down sharply. Price stayed below it with clear separation. That separation defined the earlier downside phase. As price approached the weekly descending trend line, the slope of the 20 moving average began to reduce. It did not turn upward. It flattened. Flattening is not strength. Flattening is absorption. Price began to overlap the moving average. Candles crossed it repeatedly. Closes no longer stayed decisively below. This behavior signals evaluation. The market is testing whether the average still functions as resistance. At the same time, Bollinger Bands began to adjust. The bands stopped expanding aggressively. Their width narrowed. This change in band behavior is critical. Expansion reflects imbalance. Contraction reflects unresolved trade. When bands narrow near a higher time frame boundary, the market is not resting. It is measuring. Notice how price does not escape the band structure. Each attempt upward remains contained. Each pullback remains shallow. Nothing here resolves anything. Everything here delays. This delay is not random. It is anchored to structure. To understand why this delay exists, we step outward in time frame. On the monthly chart, the dominant slope remains intact. Price continues to travel down a steep descending path. That slope has not flattened. There is no long-term acceptance visible. The monthly structure does not show balance. It shows continuation pressure. On the weekly chart, this pressure becomes clearer. Several weeks ago, price failed to hold the 120 moving average. That failure was not brief. Price did not reclaim the level. After losing the weekly 120 moving average, downside relocation accelerated. Distance between price and that average continued to expand. Distance is information. When price moves far from a long-term average, it indicates unfinished business rather than completion. At the highs, the structure appears consistent with a three-peak formation. This is visible on both the monthly and weekly scales. This is not labeled as confirmation. It is an observation of shape. After that structure formed, the weekly candle closed below the 20 moving average. Once that happened, price traveled to the 120 moving average with limited interruption. What matters is what followed. Price did not stabilize there. It did not re-enter balance. Instead, it continued to drift away. That expanding distance explains the pressure felt on lower timeframes. Now we return to the 1-hour chart with that context. Lower timeframe consolidation is not strength. It is compression under higher timeframe pressure. Price is not trending. It is pausing. Each attempt upward approaches the same descending weekly trend line. Each attempt stalls near the same region. This repeated interaction defines the current state. At the same time, pullbacks are no longer impulsive. They are controlled. They respect the Asia session anchor. This creates a narrow operational range. Between the Asia anchor below and the weekly descending trend line above, the 20 moving average runs through the middle of this space. Price rotates around it. That rotation is not accidental. When price rotates around a moving average, it is not choosing direction. It is negotiating value. The Bollinger Bands continue to compress. Upper and lower bands adjust inward. Volatility is not released. This is not preparation language. This is description. Nothing in this structure suggests resolution has occurred. Nothing suggests it must occur immediately. Look closely at how time is being used. Candles are forming with smaller bodies. Wicks appear on both sides. Closes cluster. This is how markets consume uncertainty. If the market were confident, distance would increase. If the market were rejecting this area, movement would accelerate away. Instead, price remains engaged. Engagement near a weekly trend line is meaningful, not because of what will happen next, but because of what is not happening now. There is no rejection. There is no acceptance. There is persistence. The 20 moving average continues to flatten. Flattening persists across multiple hours. This stagnation becomes the dominant feature. When stagnation dominates, time becomes the variable being traded. Check your own chart. Is price maintaining proximity to the Asia session anchor? Is the 20 moving average acting as a divider rather than a barrier? Are the Bollinger Bands holding compression? These are observable states. They do not imply outcomes. Higher time frame pressure remains unresolved. Lower time frame structure remains engaged. This is not a turning point narrative. This is a processing narrative. Price is spending time where structure overlaps. Monthly pressure above. Weekly distance unresolved. 1 hour compression inside those forces. And as long as price continues to hold inside this narrow space, the market is still working through that interaction, still absorbing time, still testing participation, still